Hello traders, this is Dave with the Compass Options Live Trading Room, and doing a Periscope video finally. Haven't had too much time to do some of these, but I did want to put one out for March so far, and we'll take a look at how it's come. We've had some pretty good wins lately. February was a tough month to trade, but March is much better, and started off a little slow, but we've had quite a few wins here. Recently, we had about 13 wins in the last couple of weeks, so that's pretty good. So let's just kind of get into it and kind of get a little bit of a wrap up on where we are, and then take a look at maybe where we're going. All right. So again, disclaimer: all signals and trading opportunities we provide here on in the Compass Options Room are for educational and demonstration purposes only. Trading is very risky, so you should never trade with more money than you can afford to lose. And neither myself or Right Line Trading are licensed financial advisors, so we won't be giving any financial advice. Okay, so let's move along here. This is the last couple of weeks, I guess, of the Periscope. I just put highlighted some trades up here. We've had a lot more than that, but we've had some, like this LAC was a time spread that we had a break even on. Boeing was a bad one for us. We took a hit on Boeing, but we had some good wins here. ENPH put debit spread, nice 50% gain on that. PNW was a weekly ATM. We did about 150% gain on that weekly ATM on PNW. That worked out really nicely. 22% in Tesla. ACN time spread we just had last week, 43% gain. CI was a nice one. Chewy, we were able to make 22% on the short puts we had on, the puts we used on Friday. So all in all, pretty good. And then we'll see if we can't continue to do these. We haven't had too many time spreads lately, just a couple. Earnings starts in April, first part of April. That will be the next time that we're going to be able to do those, the time spreads. And we'll be looking for some more weekly ATMs after that. Again, for the weekly ATMs, we really do need a market that's neutral to bullish. We haven't really had that in the last year or so, although we did. This PNW trade was really nice, so we'll take that. I just kind of wanted to go over to one of the trades we're in right now. We took this long on Friday. This is ABBV. This is the daily chart right here on the Compass system. You notice that we've got green across the board. On here, we noticed that we came through this compression here and broke out to the upside. We've got 15 sloping up, so everything is set up for this trade to be a good long. Hopefully, it will be. So we took some calls on ABBV, and I wanted to show you what it looked like on the TC2000 chart that I use. This is where I have all my moving averages, and this is an algo resistance line right here that it penetrated through. It's got quite a few touches here, about 4 touches, and it broke through it on Friday. On decent volume, nothing huge, but decent volume. I mean, we got some pretty good room to the upside here. Oops. Let's go back here. We got room up to the upside to this other line up here, this algo line that comes through right here, which cut right through that wick, by the way. But still, we've got plenty of room to the upside. We'd be out long before we got up anywhere near that. So that's one of the trades we're in right now, ABBV. We'll see how that turns out. We used PG on Friday and made money in PG, so that was a pretty nice trade as well. Okay, so here's the SPY. This is the SPY daily chart, and you can see the wedge that we're in here. And let me see, look at the SPY here for a second. Let me see if that's current. Yeah, that's the current SPY. So again, see, we had this move down on Friday morning and moved up. We broke through all the moving averages. We broke up through the 200, which is this purple line right here, broke through the 100, which is this blue line. So we ended up with a bullish engulfing candlestick after we had this really bad move down on Wednesday. Thursday had a pretty good size candle, pretty volatile, quite a lot of move to upside and downside. And then we had this candle on Friday, which is pretty bullish. And again, you can see the wedge we're inside right here. I've put this wedge on here, so you can see this wedge will come to a point here around March 31st. So if we don't break out of the wedge before then, we'll likely break out then. But we could break out before then. Again, we've got moving averages We've got the 50 up here as resistance, which is very close to this algo line. And then we're just above the 100, which becomes support. The 200 would become support. This algo line would become support. So we've got some support to the downside. So we'll see where we go, but that's the setup of the market right now. And just a GDX right here. This is GDX, a gold stock. Just kind of looking at the daily on this and where we would take a long on this. You can see we go long when everything switches to green or blue right here. This would be your long entry on this particular trade. And you go right up here. And I just like to show these. Just a lot of people aren't familiar with the compass system. This is the compass system right here. And we look for as much green as we can here. We definitely want this line right here to be green if we're going long, and this line here to be green. This is the current time frame momentum. This is the multi-time frame momentum. Those two need to be lined up. Everything else, the green would be a bonus. But you can see how we could have taken a trade right here as it went from yellow to green we get these pop out of the box signals and ride it up, and you get out up here as it starts to roll over. Tesla, I like to keep this one on every week because a lot of new people aren't familiar with some of the strategies we use. Again, you notice the compass is green across the board here, so we had plenty of institutional buying going on in compass in the Tesla the whole time. The best place to take this would be after this compression right here, with a pop out of the box signal, another pop out of the box signal right off of the 15 EMA. Anywhere in here is a good long. And these are Heikin-Achi candles, which shows the trend much better. With Heikin-Achi candles, you can stay long as you the bottoms of the candles stay flat. In other words, no tails. When you get a tail or a wick, then you can get out. So that was a nice little trend, and that's what we look for. Again, all green here. Momentum is green, current time frame momentum. Multi-time frame momentum is green. The quants are green, which is telling us all the stocks that trade with Tesla most of the time are also moving in the same direction. So the 15 EMA is green, so everything was set up nicely for that one. This is a SPY trade. And again, we can see that this is, again, for newer people who haven't used the compass system or haven't tried to understand it yet, or perhaps haven't purchased it. This is another view of the Thinkorswim. This is the current time frame Laguerre, or the current time frame momentum right here, and then I have the bandwidth, the Bollinger bandwidth here. And as bandwidth expands, that typically means that the stock is either breaking to the upside or the downside. As the bandwidth gets wider, this would be a perfect entry right here. As we went to yellow, bandwidth starts to expand. You get in here, and these are Heikin-Achi candles, flat top, bearish candles. Just ride them down, and then get out right here as the candles start to get small and putting in wicks and tails. You just take your profits. That's how we trade these. Again, another one on the SPY. This was another beauty. Again, you can see it's bearish. We had some mixed candles here, mixed colors, and then we went to yellow here, right on this candle, yellow and red. Multi-time frame red, current time frame yellow. Those are both bearish. We're breaking down below the VWAP. This pink line here is called the volume weighted average price, or the VWAP. It's important to trade stocks short that below the VWAP. You don't want to, so this would be your ideal entry on this candle or this candle right here. You're getting a pop out of the box signal telling you that compression is breaking. We're breaking the VWAP to the downside. The compass system is telling us the momentum is to the downside. The institutions are in there selling. You jump right in here and you just ride it down, and it starts to flatten out and you get out. You can see that it goes from bearish current time frame momentum to, you see this blue right here is telling you that there's some buying starting to show up, even though the multi-time frame is red. This tells you don't have any confirmation of institutional selling anymore, so you want to be out. The QSR, the trade that I show, this kind of shows the method we use when we're looking for the extremely high probability trade setups. QSR, what you can see, is breaking out here on this candle to the upside. Everything's blue or green. We've got bullish on the daily. This is the daily chart. This is a daily chart that we're following. And again, when I trade stocks long, intraday, I want the daily chart to be bullish. I don't want to be trading stocks long that have a bearish daily chart, because you're basically trading against the daily trend, which means you can't really stay in the stock overnight or even all day if you have any problems with it going against you. So this QSR on the daily is QSR on the 5-minute. See the stock riding along the 15 right here? You know, you go to blue, yellow, and then you go back to green right here. So this is where you'd want to get in, right here in this candle, as the stock price comes down and creates compression, bounces off the 15 EMA, this thin green line, trend dots are the green dots moving up. You jump right in there, and you just ride it up, then you get out. As soon as you start to see the momentum start to fade, as it does right here, you take your profits. This is if you're in an intraday trade. If you were trading this overnight, you could, obviously, you're going to focus more on the daily chart. And I do that a lot, you know, actually stay in the trade. But if you're intraday trading it, you could take profits here, or you could take profits, wait for a pullback, and then re-enter based on your daily chart. Now this is QSR on the Dominator. The Dominator system is a system that shows you what the market internals are doing, which is telling you the number of stocks moving up on up volume and upticks versus the number of stocks moving down on down volume and downticks. When you've got a disparity in the numbers, in this particular case, when you've got a lot more stocks moving up than moving down, and I mean a lot more, like 600 to 100, then you're going to start getting buy signals. Now, on the Dominator system, this is on the Ninja 8 platform, you've got a background here. This background color tells you whether you're bullish or bearish. Dark green is very bullish. So we've got a bullish setup on the QSR. You could actually re-enter this anywhere along here if you wanted to, because you're not getting any sell signals on the Dominator. It's basically telling you that the market internals are neutral. But here is where the market internals go to bullish, because you get your first buy, which is telling you that the disparity is to the long side. There's a lot more stocks moving up than moving down on volume and ticks. So that's where you could do it. But you could, in this particular case, you could do it here because it's green. You don't have a Dominator in your favor, but you don't have it against you either. And you're also trading off of this. You're looking at the same time, you're looking at the QSR on the compass system, which is telling you that this is bullish. And basically right here around 11:15, 11:30, about 11:30, you would get into that. And 11:30 is right here on the Dominator system. So if you're looking at the Dominator and the compass gives you a go ahead and buy, and your Dominator is telling you you've got a multi-time frame trend that's green, which means that the Dominator is telling you that this trend on this stock is bullish. Even though you don't have a buy signal, you can enter right there after this compression because you don't have a sell signal on the Dominator. It's not as high a probability as if you had a buy signal at the same time, but it's a pretty high probability based on the information here on the compass system. Okay. All right, so here's another SPY trade right here. Again, this is a short. You can see the background is pink, dark pink on the Ninja. On the Dominator system, we've got a pink background. We've got a red sell arrow right here. So this is where you could take it. You could take it short as it breaks below, preferably this 15 EMA right here. And you can get in here, write it down, and then get out. SPY trades, I don't usually stay in too long. This was like a 3 or 4 candle move. That's a nice profit in the SPY. That's probably good for probably on an option contract, probably in the neighborhood of about 60 or 70 cents, which would be a pretty nice trade. ENPH, again, this was a short. This has been a wild stock for us to trade. We've had good wins in this, and we've had some big losses in this one. So it's very volatile. You can see the price moves are pretty dramatic here, because this up here is 270. This down here is 233. It's 40 points between here. So it moves a lot. Your options move a lot. It's a stock you got to be careful with. But you can see right here, as we break out of this dynamic compression zone, which is this shaded area right here, which is telling us that we have the compass system is giving us a compression zone. As we break below that dynamic compression zone, and we're getting yellow and red across our momentum lines right here, you could enter this. And this is a daily to tell you can go short and take it during the day or to go keep it overnight. And again, an overnight trade would have worked very nicely. It come down pretty nicely on the ENPH. Tesla, another nice short here. And these are just short setups. You can see the VWAP here. This is a 5-minute chart. Here's the 15 EMA right here. You can see we've got some blue right here in the current time frame momentum, so you wouldn't be going short here. Switches to yellow with a break out of the box arrow right here at the same time as you go into yellow, which is telling you that you're basically breaking out of compression, which we are, and you've got a signal showing you that. and it's coming right off the 15 EMA. So this is selling at resistance. You're going to take a put at resistance right here. You don't have an awful lot of risk on this, because if the stock moves against you and moves up and closes above the 15 on the next candle or two, then you just can take your loss and get out. But as long as it's moving down and stays below the 15, you can stay in it the whole way, as long as it continues to stay red. I mean, some people might want to take profits here, but it's still all red. It moves down again and then compresses, moves down, compresses. But by the time you get over here, obviously you want to be out of the trade. And you know, I probably would have got out right in here, but still a nice trade. Okay, see, this is one we took long. We get in here, we had to wait for this thing, get right here on this break out of the box symbol on the daily. We held it overnight, it didn't do anything overnight, kind of chopped around the next day. Next day gapped up, filled our order for a nice win on this one, on KHC. Again, we're just coming out of a dynamic compression on the daily, with everything green on the daily. Nothing wrong with taking a long right there overnight. Very similar to what we're doing with ABBV that I showed you before. All right, so that was KHC, that was a nice one. Here's STZ. This was a good downside move right here. See this, we traded this during the day on this STZ, on this breakdown candle coming out of dynamic compression, with everything gone to red right here on this candlestick on the daily chart. UNH, another nice short. Again, look at your colors and see what you've got here. You can see this is bearish already on the multi-time frame. It's bearish as it compresses, but the current time frame is blue. So this is giving you mixed signals, telling you there's no institutional selling going on right here. Now it switches to yellow. Now you're getting institutional selling, because your multi-time frame, current time frame, and quant are all lined up, yellow or red. This is where you take the trade, and this is where it went. UNH went down beautifully. And Dollar General, this was one we've traded this a few times. But again, this is a 5-minute chart on Dollar General. Here's the VWAP right here, the pink line. Here's a pop out of the box signal right here, right on when the current time frame turns yellow. Multi-time frame was already yellow, but the current time frame was blue. So we're not going to trade that short. Now we can trade it short as soon as we get this break right here. And I would probably wait till this candle for confirmation. And you get a pop out of the box signal right here. You jump in it and you take it short, and you can see that everything stays short all the way down on this one, all the way from 10:30 to about 11:30 right here. Nice trade, and you would still be in it right here as well. All right, so that's the charts. We see these each week. Try to go over these. I've showed you the current setup for ABBV. These are what we want to look for. This is how we find the highest probability trade setups. Again, the highest ones are the Dominator signals in the background color align, and we also have the compass system aligning as well. Breakout of dynamic compression zone, for example, which is one of the entries for buy at support, sell at resistance. It could be the VWAP, it could be the 15 EMA, it could be a breakout of dynamic compression, it could be a pop out of the box signal. Any of those would be considered a good entry for us for a long or a short, or again, buy at support, sell at resistance. We look for Fibonacci candles to give us confirmation of a reversal in a trend. And obviously, we want to have the stocks. We want to trade the stocks in the same direction as the current trend. So you only want to take stocks long that are green for the day and short red for the day. And you also want to trade with the market trend if there is one. So if we're having a bearish day, you want to be trading short. If we're having a bullish day, you want to be trading long. Doesn't mean there aren't some good setups the other way. It's just that you're trading against the market, which by definition is going to reduce your likelihood of having the highest probability trade setups, because you're trading counter to the market trend. When the market's choppy, of course, you just lean on the compass system and the Dominator system. So, and again, we want the modified Laguerre for the current time frame, or the momentum to match the direction we want to go. So it needs to be blue or green for bullish, red or yellow for bearish, and the multi-time frame momentum, or the multi-time frame Laguerre, the same line we were looking at, that also needs to be red or yellow for bearish and green or blue for bullish. You want those two to align, and you want it to align with the direction of the market. And Bollinger Band expanding, if you're taking a breakout of dynamic compression zones, that's likely going to be occurring anyway. You want to select stocks that have relative strength or weakness to the SPY. In other words, you're looking at the SPY, the relative strength, relative weakness doesn't mean the RSI. What it means is stocks that are moving better than the SPY. So if the SPY is bullish and up 1%, you're looking for stocks that are outperforming that. And if the SPY is going down and you're looking to go short, you want to find stocks that are down more than the SPY. So those have relative strength and relative weakness. It allows you to stay in the trade longer. And if the SPY turns around or the stock turns around and starts to go against you, it's going to minimize your losses because you've got a relative strength, relative weakness allows the stock to perform better than the SPY does. So if the market turns, the stock is not going to turn as quickly and go against you as quickly. And if it's going to be a swing trade, the daily chart must match the 5-minute chart. And I would say this is probably for 90% of the time, this is true for every trade I want to take. I want the daily chart. When I go to a trade, I look at the daily chart first before I go to the 5-minute chart. I want to know what the daily chart looks like. I want to know how much support or resistance there is and how nearby it is. And I want to know if it's biased in the same direction as the way I want to take the trade. So if I'm going bullish on the 5-minute, this has got to be bullish as well. And the pop out of the box signal adds conviction to the trade, of course. And you want to have patience. Waiting for compression breaks out is going to reduce your risk a lot. In other words, if you're buying at support and selling at resistance or near resistance, that's going to cut down on what your losses is going to be, because if you're chasing a stock that's been moving up dramatically and it's moved up fast and it's not really near any support and you get in, typically at that point in time, your stop is going to have to be back down where the support is, which could be a long drop, which means you've got a much bigger risk on the trade than you really should have. All right, and we've always talked about this, the compass dominator combination. If you have the compass system lined up bullish and the dominator system is also lined up bullish with a green background in the stock and a buy signal, then these are very high probability trades. You've got the market internals with you and you've got the compass system with you. Those are the ones you want to be in. And bearish, exactly the opposite. You would have a dominator background red with a sell signal, and the compass system would obviously be red on the momentum, current momentum and long-term momentum would also be red, confirming bearish. And when you have them both lined up like that, it is possible to take a larger trade size. It's usually possible to stay in the trade longer, but a lot of this is dependent upon what the market's doing. If the market's trending, then you can definitely do this. If the market's chopping around, you typically have to back off and take profits a little bit more quickly. But if you've got a trending market and you have these compass dominator combo, you've got a really, really good trade setup. And for example, for the SPY super system that we have, what we're looking for is the SPY bullish on the compass, bullish on the dominator with a buy signal, and the SPY coming off of some sort of support level. Like if it's bullish and it's bouncing off the 15 or the VWAP, that's a beautiful trade for the SPY super system, and they have extremely high win rates off of those. So again, the best entries for trades when the dominator aligns, and basically buy off support, sell at resistance, bounce off the 15, bounce off the VWAP, bounce off a white pivot point line, break out of dynamic compression. Any of this good solid support resistance levels is where you want to be entering these trades. And I like to just go over this each week, the compass options trading and what our goals are here. And our goals are to help members become consistently profitable traders under all market conditions. This is really important. Market conditions make all the difference in the world. You have to always be aware of what the market's doing, which is why I leave the SPY up there pretty much all day long. I want to know what the market's doing so that I can align my trades with the market direction. It's really important. It's the number one thing. I want to teach members the most effective use of the compass and dominator systems. Here you've got a system that tells you what the institutions are doing and another system that's telling you what the market internals are. If you use these effectively and you use these correctly, it's going to increase your win rate dramatically. Even in bad markets, it's going to increase your win rate dramatically. We want to educate members in identifying and trading the highest probability trade setups while being patient. This is really important. We only look for the very best trade setups. And some days it's really hard to find some. Other days there's several of them coming at you. But we want all the members to be able to look at the compass and or the dominator system and identify when we're getting into a high probability trade setup. And inside the room, I like to have people post the trades that they're looking at, and then we can look at them and make a decision as to whether that qualifies as the highest probability trade setup. because the goal is to be able to have members become independent, so that they can they like to keep them in the room, but they want to be able to trade some of their own trades based on these high probability trade setups. And we have a lot of members doing that now. We have members just trading the SPY off of the SPY super system. Other members finding stocks that I don't even see and trading those because they line up perfectly. That's what we want. And we want to accomplish these goals in a relatively low stress and disciplined environment. And this is really important. Trading should not be like a ride at Six Flags. It's not supposed to be an adrenaline rush to be making trades and winning and losing. You want to be very disciplined and methodical in your trading. So that's why we do this in a low stress environment. We don't want to be stressed out. It's hard to maintain an edge when you're trading emotionally like that. And so we want to do this low stress and disciplined environment, and that's what I'm trying to accomplish in the One Options, in the Compass Options room. All right. Again, we talked about this 2022 trading environment. Yeah, we don't need to go over this again. Last year was a terrible year as a bear market, worst since 2008 financial crisis, most difficult trading environment in many years, one of the worst I've ever seen. And this past February was just as bad. Many retail traders weren't able to adjust their trading strategies and their mindsets, and they blew up their accounts, so simply gave up. But I know many traders that happened to. Swing trading was particularly difficult because of the many gaps at the open and the violent bear market rallies. Very difficult to stay in a stock. There wasn't much trend. It was chopping around too much. And again, if you survive the 2022 trading environment, you're well positioned to be a consistently profitable trader. And this is a really good training environment, but it's not a trade environment where you want to be throwing a lot of money at the market. We can look at the recap. We've done this each week, but in 2022 we did 340 trades in the room, 298 wins, 86%, 45 losses, 13%. Pretty nice win rate right there. Profit factor 2.16. Now we did add the Compass, the Dominator system in October. So what I wanted to do is go back and look at the trades from October, November, and December, and find out how they performed. Now this is October, November, December, using only the Compass system. We didn't, in these trades, we did not have the Dominator system lined up. Now we didn't have it going against us, but we didn't have it lined up, so the Dominator system would have been neutral. So we just took Compass trades on these particular ones here. We had 151 total trades, 135 wins, 89.4 win rate, and that's pretty common for what we usually produce, about 88 to 92%. But the profit factor went up to 3.57 from October to December. Now the using the Compass system and Dominator system in combination. Now this is October through December, when the Compass system was lined up and the Dominator system was also lined up at the same time. So if the Compass system was giving us a buy, then the Dominator system would have had a green background for that stock, and it would have had a buy signal. So that's the really high probability trade setup. Now, of course, there's going to be fewer trades because both of these don't line up together as frequently as just the Compass system does. But we had 123 trades for 119 wins, 96.7% win rate, which is pretty astronomical. Very difficult to continue that kind of a win rate, but that was a pretty good win rate, and that's quite a few trades. So profit factor 12.41, really off the charts. Now the SPY Super System, which was just a beta test, I didn't really call these out of the room for the most part, but I was testing out the Dominator system, for example, with a buy signal and a green background in the SPY, and the Compass system also lined up on the SPY with a green for the buys, and it was also bouncing off of, like, it come down to the VWAP and was bouncing, or come back to the 15, it was bouncing. In other words, we were getting in at support, we were selling at resistance. We did 100 trades, 86 wins was 86% win rate, 10 losses, 4 scratches, but the profit factor was higher. It was 14.17, which is really, this was high, but this is really high. And the reason for that is most of these super trades, these super system trades, the profit was more on each trade that we won on than some of these trades were, and the losses were smaller because we tend to get out pretty quickly on the SPY when it turned around against us. So that 14.17 was a really high profit factor. And that was January and February performance, not great. 91 trades, 75 wins, 16 losses, 83% win rate. Pretty low for me. February was a terrible month. January was a pretty good month, but February was pretty crummy. But still, listen, 83% win rate is pretty good. But notice that our number of trades is down some. We didn't trade an awful lot in February. And these are just doing put credit spreads off of the highest probability trade setups. There's the information, we won't go into that tonight, but that's on doing put credit spreads. I have a video on that. This is on doing debit spreads as a day trade using weekly expirations. I have a video on, actually a post in Reddit on that. And we do these, I talk about these, we take these in the room. There's a post on Hikinashi candle that's in the Reddit subthread, Reddit sub. And this is a video to my video library right here, with all the videos, and Rory puts all those videos up there, and everybody in the room has access to those. There's a lot of them now. I mean, there's a lot of them. I just added one recently on the weekly ATM trades, since we're going to start doing more of those. Here's the stocks I'm watching for Monday. ABBV we're already in, but I like, these are the ones that I like. I like Google, I like Apple, I like HEL, General Mills, JS, and Procter & Gamble. We traded this Friday. It's still set up nicely. Bearish side, I like Woof, Bill, Ring, RNG, and XMTR. You gotta be careful with Bill and Ring. They're both tech stocks, and tech has been pretty strong, but these are the ones that I like, the four I like bearish. And again, what you want to look for on those trades, if you're going long, if you're taking some of the bullish trades, we want to wait for those prices to break over Friday's high with a high probability trade setup. In other words, all the criteria matches and it's breaking over Friday's high. Shorts, just the opposite. You want to wait for a high probability trade setup on a stock that's breaking below Friday's low on the shorts. And again, try to take trades that are lining up with the market. In other words, if the stock market's going down, you want to be looking for the shorts. If it's going up, you want to be looking for the longs. All right, so that wraps it up for tonight. And I appreciate your time to look at this. I hope everybody's doing well in the room. We'll see everybody in there on Monday morning. And have a great night.